all the other banks have virtually raised variable interest rates for home loan customers. They've literally passed on the RBA's cash rate rise in full. How much stress is this going to put on home mortgages?
Well, right now, we're seeing very little in terms of stress coming through the system. So that's good. I guess from the recent rate rises we've seen, the million-dollar question is whether we're going to see that stress come through when we see further rate rises. We're coming off an extreme, low rate environment, where, obviously a lot of debt was borrowed on that. I guess, the key is whether, I guess, we've received 2 or 3 more, or possibly 4 more rate rises, the asset quality would deteriorate further. So, look, I think in general, when you take a view across all 4 banks, most of the banks are provisioned quite well. I think they've all learned the lesson during the global financial crisis, many years ago. So in terms of lax lending standards, it's not prevalent today, but we are going to see some stresses come through, but it's not going to be as harsh as it was.
Okay, so I guess a follow-up from me, Jason, would be when you look at the strength of the Aussie consumer, are they able to withstand higher prices going from here? And to what extent will it affect new loan demand?
Yeah, so right now we can see loan demand come off, right? So, and it's a function of, obviously higher rates coming from a very low base. And property prices already in Australia have already come off. So those two go hand in hand. So people are borrowing less to buy property. Property prices has fallen. And in fact, in terms of, looking at another country where bank lending has come off a lot and house prices have followed, is actually you just have to cross over the Tasman and look at the New Zealand markets. And in that market, look, because the central bank over there has been on such a front foot in terms of raising rates, their markets is in regards to what one should look at in terms of where Australia will be following next.